Hello, and welcome to myfinanceteacher.org. While gold, as you see over here, is taking a few days to cool down before breaking above that resistance at around 1850, let's have a look at a range of gold miners and let gold do its thing, possibly sometime within this week. And today I want to have a look at 4 mining companies, which are all relatively large, but not some of the largest gold mining companies in the world. The similarity between them is that their market capitalization is somewhere around $2 billion. So if you're already holding some of the largest miners, such as Newmont for example, and want to move down the chain to relatively large companies that are still not considered small within the gold mining industry, you might want to have a look at Pretium Resources, Eldorado Gold, IAMGold, and Coeur Mining. As usual in my valuation factors, I look at the discounted per share value of the reserves in the ground after production costs and long-term debts. And we also throw in a secret sauce of insider shares, as insiders tend to be strong hands, possibly holding up the share prices. Also, as usual, I'm going to have a look at 3 scenarios. Balanced scenario looks at the gold price that is 2% below the spot market, which gives us 1790. The conservative scenario is 10% below the balanced scenario at 1611. An optimistic scenario is only 10% above the balanced scenario. It's only around 8% above the market spot price at 1969. Although over the long range, as this valuation usually tends to work in the longer range, I do believe that an optimistic scenario for gold price is far beyond $3,000. For more details on that long-term forecast, the link at the top of your screen right now. Now let's go on through the details of those valuation factors for each of those 4 companies. First, looking at proven and probable reserves of gold in the ground, we have 4 million ounces for PVG, 17.7 million ounces for Eldorado Gold, 15.6 for IAMGold, and 2.3 million ounces for Coeur Mining. These numbers are slightly under those that you can see in their reports, usually shown by the end of 2019. That's because I subtract the gold produced so far in 2020 from those reported end of 2019 reserve values. Moving on to measured and indicated resources, we have 3.4 million ounces for PVG, nearly 8 million ounces for Eldorado Gold, 5.2 million ounces for IAMGold, and 2.6 million ounces for Coeur Mining. These are all numbers for gold, and I also look at the reserves and resources for silver as well, although we don't actually look at these numbers for this presentation. Most of the value within these companies is within gold. Generally, as you see, both for proven and probable reserves, as well as for measured and indicator resources, we have Eldorado Gold leading the pack of these 4 gold mining companies, with IAMGold at the second place. Next, looking at the costs of extraction, this is all-in sustaining costs. Those are somewhat similar at 1040 for PVG, 900 for Eldorado Gold, 1255 for IAMGold, and 986 for Coeur Mining. These are midpoints for their 2020 guidance. Looking at long-term debts, they are also somewhat comparable at $368 million for PVG, $336 million for Eldorado Gold, 471 million, a bit of a large debt here for IAMGold, and the smallest value 278 million for Coeur Mining. Next, looking at shares outstanding, PVG has over 187 million shares outstanding, Eldorado has nearly 175 million shares outstanding, largest number of shares outstanding for IAMGold at 471 million shares, and nearly 244 million shares for Coeur Mining. The insider shares don't make up large percentages for these 4 miners. The highest is for PVG at 1.64%. In Eldorado we have only 0.16%, a quarter of a percent for IAMGold, and 1.45% for Coeur Mining. Taking into account the time value of money, I'm going to use a discount rate of 5%. And for time itself, I'm going to look at proven and probable reserves in years, where I divide the reserve value by the annual production. That gives us 12 years for PVG, 33 years for Eldorado Gold, 24 years for IAMGold, and 7 years for Coeur Mining. Next, to take all of the above into account, let's have a look at our valuations. But before that, a quick break. Let me point out some of the highlights we've had at myfinanceteacher.org so far in October and November. Our Bitcoin gains have been amazing at over 58%. Our investments on oil producers has done and is doing very well, with the gains on different producers ranging anywhere between 30 and 40% just over the last several weeks. And also over the last several weeks, we've been doing relatively well on coffee and some other assets as well. So if you're interested in more frequent and detailed analysis on a range of assets, check us out at myfinancesteacher.org. An interesting product that we have at myfinancesteacher.org is the portfolio where I track all of the trades that have ever happened, which provides great transparency on all of our gains as well as losses. I would guess that not many other analysts would track their performance with such transparency. Welcome back to our valuations, starting with the conservative valuation. And we see that out of this pack of 4 gold mining companies, PVG is the only company with overvaluation, where the conservative valuation is below the ongoing market price. So if over the next few years gold price does manage to average somewhere around 1600, perhaps share price of PVG might suffer considerably. Although, do you think that gold price is going to average 1600 over the next 2 to 3 years? Let me know in the comments below. So coming back to PVG, our conservative valuation is only $8.59 versus the ongoing market price as it closed on Friday at $11.48. The conservative valuation of Eldorado Gold is very attractive at $53.34 versus the market price of only $12.07. That gives us an undervaluation of over 200%. I really like Eldorado Gold, and as the members at myfinancesteacher.org know, I do have a large allocation in EGO. Next, IAG is also showing us an over 100% undervaluation with a conservative valuation at $8.56 versus the market price of $3.51. And lastly, Coeur Mining, a little bit of an undervaluation there with a conservative valuation of $8.76 versus the market price of $8.03. Next, looking at the balanced valuation, if gold price averages somewhere around 1800, say over the next few years, and if the companies don't manage to dilute their share prices too much, the balanced valuation for PVG would be $11.76, comparable to the ongoing market price of $11.48. Balanced valuation for Eldorado Gold would be $67.11, much higher than the market price of $12.70. Balanced valuation for IAG is $13.26, multiples higher than the market price of $3.51. And lastly, balanced valuation for CDE is $11.55, noticeably higher than the market price of $8.03. Next, looking at the optimistic valuation. That's again more or less fair value for the companies if they don't dilute their shares too much, in case if the gold price averages around $2,000 over the next, say, 2 to 3 years. That gives you nearly $19.50 for PVG, compares favorably well versus the market price, with around 80 or 90% undervaluation. Eldorado Gold gives you an optimistic valuation of over $90, an amazing multiple undervaluation. Similarly, IAG gives you over $22 optimistic valuation, also multiples of undervaluation versus the market price. And CDE gives you an optimistic valuation of nearly $22, which is over 200% undervaluation versus the ongoing market price. So in summary, I do like Eldorado Gold the most out of this bunch of 4 companies, and my second most preferred company is IAG, although they do have quite a large debt compared to the other 3. Next, let's have a look at the highlights that might drive the share prices further over the next few years. Firstly, I like that PVG has a large land package with a large exploration potential for this company. Additionally, PVG also has a very large cash position at over $100 million. Talking about Eldorado, in addition to gold, they also produce copper, lead, and zinc, and that might also prop up their valuation as well. They're also expecting a technical study on the production from Lamaque by the end of this year. If the results of the study are positive, that might help drive the share prices a little bit higher as well. And they're also expecting some construction permits at their Skouries development project in Greece. If they manage to progress this project further over the next 1 or 2 years, That again can be a very strong driver for their share prices. For IAG, what I like is their large cash position at several hundreds of millions of dollars. IAG is also expecting some more earthworks permits at their Coeur Mining project that's in Canada. And the interesting part of this project is it's quite large with 5 million ounces in reserves, and those earthwork permits are expected somewhere in this quarter of 2020. Additionally, commercial production from this Coeur project is expected in 2023. So as these valuations generally work in the longer term, over the next several years, this Canadian project might actually help IAG move their share prices higher. That's of course together with a likely strengthening gold price. And talking about CDE, I like that they're expecting production expansion at the Rochester project in the US by the end of 2022. So that's my view at these relatively comparable gold mining companies with all around 2 billion in market cap. For now, I wish you a pleasant day and good luck in your trades.